Stock futures barely budge despite a historic rally last week as the government shutdown drags on. What does this mean for investors? Traders on the New York Stock Exchange floor in New York City witnessed a remarkable week, with Wall Street hitting record highs. Yet as the US government shutdown persists, stock futures showed minimal movement Sunday night, leaving many wondering if the momentum can hold. On Sunday evening, Dow Jones Industrial Average futures inched up by 37 points, a modest 0.1% increase. Similarly, futures for the S&P 500 and Nasdaq 100 also rose by about 0.1%. This comes after the S&P 500 and Nasdaq Composite enjoyed their fourth positive week in 5, climbing 1.1% and 1.3% respectively. Meanwhile, the Dow recorded its third gain in 4 weeks, advancing by 1.1%. But here's where it gets controversial. Despite the ongoing government shutdown, which has stalled critical economic reports, like the September jobs data originally scheduled for release last Friday, investors seem largely unfazed. Lawmakers have once again failed to agree on funding to reopen the government. Yet the market's resilience suggests many see this as a temporary distraction rather than a fundamental threat. Tom Lee, head of research at Fundstrat, offers a bullish perspective, calling the shutdown a sidebar issue. He predicts the S&P 500 could reach at least 7,000 by the end of the year, possibly even higher. Lee advises investors to look past the current chaos and data gaps, suggesting that any market weakness should be viewed as a buying opportunity. If stocks dip, use it to buy the dip, he recommends. Adding to the complexity, the Federal Reserve is set to provide fresh insights this week, with speeches scheduled from Fed Governor Stephen Meehan on Wednesday and Chair Jerome Powell on Thursday. These comments could influence market direction amid the data blackout. In recent updates, healthcare stocks are recovering after a particularly strong week, and stock futures have nudged higher at the open, reflecting cautious optimism. So, what's your take? Is the market's calm in the face of a government shutdown a sign of strength or complacency? Could the lack of economic data be masking underlying risks? Share your thoughts below. Do you agree with the bullish outlook, or do you see storm clouds on the horizon? This is the part most people miss. Sometimes the biggest risks are the ones investors choose to ignore.